Alright, so this is part number 3 of trading cycles. The last part, after that, basically you have all what it takes to understand all the principle of cycles, how to deal with them, which you could also apply for yourself, of course. So let's begin. We are going to talk about spotting and confirming the end of the cycle, trading cycles with convergence principles. We will start with false break principles, okay? Convergence principles I'll show in the end, and the reason it will be like trading cycles with false break principles, trend line breakouts, and at the end it will be convergence principles. And the reason would be basically because we start from the aggressive, goes through the modest, and to the conservative type of trading. I'll explain you what I do normally, how I do normally, and if you want, you can do normally as well. But here comes the very important but. You have to remember, any strategy, and I will repeat once again, any strategy can be applied after you choose the direction of the cycles. I'll show you how we work and how we decide, and at the end I'll give you time for questions, of course. So let's start. So the first thing we have to do is, believe it or not, to spot and confirm end of cycle. How do we do that? First of all, we remember what kind of cycles we have. We have the double cycle, triple cycle, special cycle, and who can complete me here? The last one is range. Beautiful. And we have a range, which normally people look at it and say, it's a range, I don't want to trade it. I say the same when it's intraday range. But when we are talking about weekly or daily cycles range, we are talking of hundreds of pips. And if you know to deal with that correct and to touch it correct, you will know how to make potential profits inside. Very important. We will need the divergence at the end of the cycle and false break. Now, before we go for examples, I want to show you here some two things. Okay, so let's say we have this. What is this? How we call it? Triple, special, range. How do we name it? Double. Beautiful. And this is a double cycle, right? Divergence could appear between these two spots. So basically something like that. Oh, sorry. You see? Even okay, like this. Divergence could be between this. You don't see anything on the screen? Guys, you see my pen writing or? Yes. Kurt, that might be you. Sorry. I don't know what to say. Everyone else sees. I don't know. Pardon. So divergence could be, as I said, here, like this. Or at the end of this move, there could be small divergence as well. That's all fine, as long as there is divergence on any of the parts of the cycle. Remember that, very important. The next important thing for us is to identify a false break. Once again, we come to this place and we want false break. Why? Who can tell me? Why do we need a false break? How does it help us? Who can tell me, guys? Who can help me? Try. To follow the trend, that's not exactly correct. Shows the change in the direction. That's more likely correct. But how? What does the false break mean? Okay, let's separate it by two parts. The first thing, in this double cycle, who controlled the market? The bulls or the bears? While the double cycle was created, the bulls, right? They were powerful, the buyers. Now, the false break represents what? That the buyers were trying to create new highs. How do we know actually that the buyers are strong? If they keep creating new highs. But they tried to create a high and they failed. What does that mean? That maybe there is a good chance they are losing power. If they are losing power, that means that the bulls might be closing their positions. And if that's a real big money option expire, that means there is a very good chance we are going to get money switching hands, which means we are going to be able to ride down all this move. That's why a false break is so important to us. By false break, we identify a potential end of cycle, trend, move, okay, call it whatever you want, and potential switch to the opposite side. Why I say potential? Because there is, unfortunately, no guarantee in Mr. Market. Mr. Market, with all the respect to it, still sometimes just do whatever it wants to do. So where come the advantage of ours trade the cycles this way with false break and divergence? Risk, reward. We know that we want to take profit. If it's double cycle, we want to take profits on 38.2 Fibonacci. If it's triple cycle, we want to take profits on the 50%. If it's special cycle, in between 38 to 50, when we will get divergence against us. In the range we will see today, now, soon. Now, how does that help? Because if we know to spot this potential top, on lower time frames, we can get the biggest risk rewards here. And how does big risk reward help us? We can be wrong once, twice, thrice, and one time it's enough to catch the right place to write it down. That's where our main advantage, one huge advantage on all the other traders. To spot that on the right time. Timing is everything. Everything. If you follow the UFC, you know what the UFC, guys, is? I believe you do. It's fighting, ultimate fighting. There's one great character there called, his name is Conor McGregor. When he beat Jose Aldo for the title, Jose Aldo was #1 ranked ever from pound to pound. And when he beat him, he said, "You saw today how timing beating speed and power." Timing is everything. When you have your timing, I'm sorry, I bring examples from sport. That's my second love after trading and creating things. Okay, so that's basically everything in trading, to spot the right timing. And when you know to time your buys or sells, okay, you know that you are on the very edge of being able to enjoy huge risk reward trade. So far, so good. So we have a cycle which comes to the end, divergence ending the cycle on any of the spots, false break, which false break must come with divergence as well. Here is a note. While divergence must be on the time frame with the same time frame with the cycle, false break could appear on one lower time frame or two lower time frames. Therefore, if this is a weekly double cycle, the false break could be found on daily or even the 4-hour chart. If that is a daily cycle, then false break could be found on 4-hour chart or even 1-hour chart. And that's what brings in the great potential of risk reward. Okay, so this is the first thing that's our steps we do by identifying the end of cycles. Now let's take a look at an example. We have here a bullish triple cycle. Classical or not? Almost. Why almost? Because as I told you, triple cycle, which we can put inside the channel, would be ideal. If this high was a bit higher, then it could be classical. But it's a double top here, followed by bearish divergence. We know there is a very big chance we are going to get a reversal. Okay, on a lower time frame, in that case 2 time frames, this is a daily cycle, so we can find that on a 4-hour or the 1-hour chart, we got false breaks. Actually, we got 2 here. We got one which failed to hold, and we got another one right here which worked big time. And here once again, you understand, you can be wrong once or twice as long as your cycle and definition correct. You can make a lot of money on the next opportunities. Take a look on this bearish triple cycle example. 3 moves down, this is a gold, ending with divergence. Divergence that comes on a moving average. As I have mentioned in the previous webinar, divergence could be on a histogram, on moving averages, or both. If you don't know yet what divergence is, it's a great time for you to go to the webinars inside the media zone talking about divergences. We need any kind of divergence here. I don't care what type is. So that was a daily cycle, right? Here, daily cycle. We drop down to lower time frame. In that case, that could be 4-hour chart or the 1-hour chart, and we are looking for false break. Once we spot a false break, we can say clearly that as long as the bottom holds, we expect rally. How far? Who can help me here? How far? That was a triple cycle, so we want what? 50% of all this. So our target would be here. So far so good? All right? So this is basically our entry. And sometime after, we would hit nice profits. Okay? So basically, once we spot the end of the cycle, potential, and we spot a false break, we say, as long as this bottom holds, we are only acting as bulls. Does that make sense to you guys? Why? Because we had end of cycle and divergence and a false break telling us that the bears are liars and they are weak now. Okay? And it's good opportunity to us to go and to switch. Now, in that place, how many of us would be panic? Let's admit. I'll say, this cycle, this flood, or this market, whatever it is. How many would actually say here? Many. I believe everyone. And or in that or the other stage of the trade. Right? And here's the good part, guys. If you missed one and you missed the other, as long as that long-term cycle did not reach, you can be looking for buy opportunities. So if you missed it here, you get a retrace here, you got a retrace here, look for re-entries on any of the opportunities because our direction is still up. Kurt, let's so we want false breakouts for the next big move. Is that correct? The cycle is on the big time frame. The false break could be down to two lower time frames. So if your cycle is daily, false break could be 4-hour chart or the 1-hour chart to the opposite direction of the cycle, because end of cycle means money switches hands. Options expiring. Bullish double cycle here. Two waves up, equal, classical, no need even to explain nothing. By the book, rare, but by the book. Bearish divergence on the moving average, no. On the histogram, yes. Going down to the 4-hour chart, and we got here false break right on the 100% Fibonacci expansion. We got a divergence. We know we are going to attack. Bearish double cycle. Two waves down, bullish divergence, only on the histogram, which is fine. 4-hour chart, two false breaks in a row. If we would be attacking after one, we would fail. We would be attacking after second, we would win. Bearish double cycle to the 61.8 expansion. How do we define 61.8? Second leg to be twice longer or shorter than the first one. So this is our first leg, this is our second leg. It has to be visually twice bigger or longer or shorter. We got a 61.8, we got a bullish divergence, we are looking for false break, which we got right here with a bullish divergence, and we got our long sign. That was a weekly cycle. We can find false break on a daily or the 4-hour chart. Bullish special cycle. Okay, what special cycle is? Just a reminder, X, X, double or triple X. First and last legs of the cycle are almost equal, visually equal. The middle one is twice or thrice bigger. Divergence at the end, we are looking to trade sell. Here we got our false breaks beginning the move down. So the first principle, last one, bearish special cycle, boom, 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 bullish divergence, 4-hour chart, false break with divergence. We are after buys only. Just remember, that's the candle where the false break completes. When the false break and divergence to complete. Divergence complete when MACD ticks up. False break complete when the candle where you find the false break closes above the broken level. Green candle, of course, because green identifies what? Bulls. Now, before we move on to the range, I just want to summarize this first principle of trading, classical false breaks. Step number one, end of cycle. Step two, divergence. Step three, false break. FB does not mean Facebook in that case. That means false break. Okay, all right? And false break plus divergence on one or two lower time frames. Okay, this is the most aggressive way to trade. The next one we will learn would be modest. Okay, and the last one I'll show you would be convergence principles, which is the most conservative. All right, so that's the steps to trade the false breaks. Now, before we learn the next part, which would be the trendline breakouts, I want to talk about the range. How we identify the range, you already know from the previous webinars today, 2 false breaks in a row on the same direction or opposite directions. And range should come at the end of cycle. We got triple cycle down here, followed by bullish divergence, and we got 1 false break here, 1 false break here, 2 in a row, 1 false break here, which make for us a range. When we get a range, we know we want to sell tops or buy bottoms. In that case, it would be best to buy bottoms. Why? Because we're still at the end of triple cycle, right? That was triple cycle. So there is a good chance we're going to switch directions. And that's why buy the bottoms would be smarter idea. How do we do that? Every time that inside the range we get 2 or 3 moves down or special cycle like this, 1, 2, 1, 2, 1, 2, which was happened during the SPY, but still every time here too, 1, 2, every time we get 2 waves down or 3 waves down, we can look for the buy opportunities again. To target where? The top of the range or the 50% of this triple cycle. In that case, it's the same. But normally it's not. So, on lower time frames, we are looking for entries. 2 waves down, which bring us to 61 net expansion, by the way. False break with divergence, and we can attack the trades. Okay, if we are still selling the tops, 2 waves up, which is like this, 1, 2, and 1, 2, right? 2 types of false break. Remember the magnet zone? This is the magnet zone. And at the top of the range, we got double cycle, magnet zone, bearish divergence, and a false break. We can go and sell. 2 waves down, bullish divergence, we can go and look for buys. So do not be scared of a range. Be scared of a range on the 15 minutes or 1 hour chart. That's where you have to be scared. Not a daily, not a weekly. They are big, they are fat. They provide many opportunities inside. Questions so far about anything we have learned so far? The next part would be the trendline breakouts, and later on with convergence principles. But before, any question about the false break? I did not mention here that when we spot a false break, remember the 2 candles principle, which we have learned on the previous webinar, right? You have it already uploaded. Right? This is the final stage videos. It's too early. That's on the tips. That's not a rule. That's a tips. Okay. So, very good, guys. Let's keep going then. You will notice that sometimes the convergence principle suits better. That would be the conservative thing I'll show you later on. And it's easiest to spot. Other times the trend line is much clearer than the convergence principles. Basically, most of the traders prefer trendline breakouts. Because somehow it still belongs to the basics. You draw a trend line, it breaks, you enter. Sounds good, sounds sexy, sounds profitable. I love that too, but only on the second option. My first option is always with convergence principle. This is why I call it the most conservative. Okay? Now, I do want you to remember to know all, and you decide which part you want to take. Aggressive, conservative, or modest. I will explain you on the tips part at the end which is best to apply and when. So the bullish triple cycle, we got it right here. We got a divergence, we got a false break, we got a trend line. This was a fake breakout. This was a reliable breakout, which would allow to make great profits. You can enter, again, everyone with his own preferences, with the close of the candle or with the breakout. I trade with the breakout, to be honest. We protect always the top, always the last top, before the breakout. If here we would have something like that, we would protect this. But always the last top before the breakout. Alright? So when you hear me saying in my reports, for example, put your stop loss 2 pips above the last high, that's what it means. Last high before the breakout. When we sell, we also add spread to the stop loss. Target should be at least 1 to 2. If it's not allowed for target number 1, then the total target, and we have the final target according to the daily cycle, remember? Then the total target, total profit should be at least 1 to 2. Of course, I say at least because the more the better. Triple cycle down, bullish divergence, lower time frames, false break, and trendline breakout. Now you see why it's more conservative than the false break, because false break was here. Trendline breakout is here. This move we would miss, but if that would continue here to go down, we would not be in a trade, so we would save money. Okay? That's why it's more conservative than the trendline breakouts. With the breakout, we enter the trade, protect below the last low, 1 to 2 at least is our risk reward, and final target should be, of course, according to the big cycle, so the 50% here. Okay? Bullish double cycle, bearish divergence, false break, trendline break. Bearish double cycle, 2 waves down, bullish divergence, 2 false breaks, trendline breakouts. Now, why I like trendline less? Because trendline could be drawn like this, trendline could be drawn like this, and one would fail here, the second would make money. And that's why I like it less, because that's individual. Everyone can draw whatever he sees. I like it less. I like when it's clearer, when it's something, this level broken, this level broken, retrace, blah, 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 boom. That's where you attack. Trend lines, good, but that's individual. So one can make money, one can first of all lose and then make. And that's the difference. That's why I still love trend lines, but on the second option. Bullish special cycle, bearish divergence, we are looking to sell. Trend line breakout, in that case that's like triangle breakout or wedge. Right? And a bearish special cycle, bullish divergence, false break, trend line breakout. Once again, you could have drawn like the hit, like from these highs, and still be correct, and still would make money, of course, in that case. But That's why, again, that's the difference of the false breaks. And each of them would find. If you miss the first party, don't worry. Don't just jump in. Wait for the good risk reward. Wait for 2 waves down. Draw another trend line and join the breakout. You still have plenty of room to go with the trend. And in a range, we spot the range as I explained before. At the bottom of the range, we are looking for the trend line and we can trade the breakouts. On the top of the range, we can trade also with the breakouts. On the bottom of the range, and the next bottom, we can again trade the breakouts. And in that case, we would protect this low. Principle of 2 candles, remember? Same here. Is that deep enough correction? The answer is yes. Here we enter, here we protect. Et voila. Now, I don't want to thank you for watching yet. I do want us to go for the next important things. Convergence principle. Now, that's my favorite style of trading. And the reason is because it is combining false break and it is combining regaining the momentum I want to get, which is the best part that could be. So for example, we had this cycle. See, right here. We are close to 161.8. Close enough? Yes. Because this entire cycle is 1500 pips. So 150 to the top. 150 down and 150 up. That's my action zone. I reached this cycle. By the way, why I measure from here to here and this is the correction? Remember why? Because that's a triangle. I always need the last low from the moment where it started to go up. Always. Okay? So we don't measure like this, we measure like this. It doesn't change much in that case, but that's just correct. Alright? I reach the top, I go to lower time frames and I start to look for false break. One false break we had where? Right here. Correct? Now, what I love to do is not just false break, but I also love to gain convergence principle, which means I want to see that regaining lower lows, right? Like this. Then retracing, and from this place, I love to attack. So this way I combine fake breakout, false breakout, and convergence principle, which is gaining the momentum in the direction I want. Remember, if that was a daily cycle, I can look for false break on the 4-hour or even the 1-hour chart. It happened this way that the market continued to rally. I was looking for convergences. I got another false break here, which again did not provide any convergence with lower lows. We continued higher. And we continued higher until that very place. We got a false break right here, and we got the convergence finally created. Lower lows created right here. In that case, that was also convergence full, right? Full convergence with MACD histogram confirming confirming the convergence in a bearish direction. When we get that, there are two options to enter the trade. One of them is to sell limit and I will explain you how do I sell limit. The second one is let it rally, set the trend line on lower time frame, and with the breakout, go and sell. So you see, basically what happened to me here, I saved all these opportunities to sell before. I could have sold the false break, I could have sold the trend line breakout. Okay, and I might be wrong a few times in a row, losing money. Right? But that time I was waiting for the convergence principle. That's the most conservative way of trading. It does not guarantee 100% success, but it does guarantee that on the bad calls, it will save you the losses because you are looking for specific things to happen and not just one, few. And as I told you in the first webinar, or the second, I don't remember, when it comes to money management, it's not only about how to make more. It's also about how to lose less. This is the main advantage of the convergence and convergence principles. It does not give you the best entry. That does the false break. It does not give you with the classical momentum. That does the trendline breakout. It gives you false breaks, which means the bulls or the bears are fake. Regain the momentum in your direction by creating lower lows or higher highs, and a great confidence that now it is a good timing. All right? This is what it is about. That's the convergence principle. Now, there are two sell limits or buy limits I apply. If, and that's very simple, if the MACD is with us, we can set 50% Fibonacci from last high to last low creating. So as long as the low creating, we just adjust the Fibonacci. The first time it retraces to 50%, boom, we are in. If the MACD does not support us, so it's not full convergence, but convergence principle, 38.2 Fibonacci is the one we are looking to trade. That's all. Now, is that like a built-in rule? No. Because if you get good risk reward enough on the 38.2, why to wait for 50? If you get 1 to 3, 1 to 4, 1 to 5 on the 38.2, fine, attack this level. Not always we need to be greedy. That's game of statistics and percentages. If you get good risk reward on 38.2, great, attack it there. But basically, that's the only difference. If the MACD with you, then you can attack the 50%. With you means the convergence is full. So that's the ways we trade. That's the differences we have between aggressive, which is just the false break, models, which is the trend lines, and conservative, which is the convergence and convergence principle. Now I do want to give you a few tips, guys. How do I work? First of all, there is one thing here called the statistics. This statistical indicator is not shared in a members area currently because I don't have yet a way to protect that, to be honest. We'll find a way. But don't worry about that. Why? Because on my daily forecast and my weekly forecast, I always mention the good dates. These dates just give me the dates to look for the right buys or right sells by identifying me when is a strong top, what dates of the months should be strong top, or bottom of the month should be strong bottoms. right? What dates of the month should be strong bottoms. And then I know if my cycle meets these days, I'm in good hands. I can go and trade. That's the first thing, but again, as I said, I don't have yet a way to share that. So as for now, everything is shared in the forecasts. Also in the reports. Sorry, what it is? Okay, this is the first thing. The second thing, I want to give you the steps of work. So the first thing we do, and here I need your top focus, guys. First thing we do, we identify the direction of the weekly chart. Why? That's where the money is. Weekly and monthly, they are the same. So if you don't see clear on weekly, go to monthly. Now, I want to ask you a question, guys. Where are we now? We are now here. What do we have? What is that? Double cycle, triple cycle, special cycle, range, what is that? Currently. Who wants to try? Good question, huh? Difficult one. Now basically, this is a potential range because we had a down move, we had a false break. Now we have another false break here. So this is a potential range, right? Even if not, this is double cycle. Now here is the problem. Every cycle must have divergence, and this cycle does not. Therefore, it's not a double cycle on the weekly time frame. So the only thing we're left with is a potential of range. We had one false break, we might get the second one. Right? Now, this is a weekly chart, right? So it's take long. We go lower to daily chart. Now things start to get clearer. We got double cycle here on a daily chart. And here, boom, boom, boom. And there is divergence on a daily chart. Bearish one. Starts to be interesting. Top of weekly range, end of daily cycle. Starts to look good. The combination. I drop to 4-hour chart or even 1-hour chart and start to apply my trades. How? By false break, by trendline breakout, or by convergence principles. My favorite. And here comes the good part. You guys might have any strategy in your hands already. And that's fine. I am not here to teach you strategies. There are millions of them. I'm here to show you what the big guys are doing behind the scenes while everyone else is dealing with just arrows or schmeros or moving average crossing, blah, 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 blah. The main focus is not on the strategy. The main focus is on trading, direction, how and why the market is moving. That's what I want you to understand, guys. Keep all the BS for other traders. Deal with the real things. Real things are this. Identifying direction. Once you identify direction, you know where to trade. We understand we want to go sales. Look for sales and sales only. That's all. Okay? So that's basically what we do. We identify the weekly chart. We drop down to lower time frames and we confirm our weekly expectations. What do we do if, like with the dollar yen, where are we now? We are nowhere. No two waves, no divergence, nothing. Right? So here is the thing, guys. This is a weekly chart. Our direction is yet up. We don't have bearish divergence yet. Well, we do have bearish hidden here, but no ending of cycles, right? So basically our direction is still up. In order to trade that up, what do we want to do? We want to get two waves down and look to join up. Or we want to get a range and to look to buy the bottom of the range. Why? Because we are looking to join the weekly cycles. Currently, they are bullish. Only bullish. But, here comes the but. Can we actually trade against the weekly? And here comes the tip that you will never hear anywhere else. Yes. If you got two false breaks in a row on the lower time frames, so on daily or the 4-hour chart, we got here, guys, take a look carefully, we got here one false break, right here, and the second one was not created, therefore dollar yen is not ready for a sell. So to make it correct, we are looking for two false breaks in a row because we are against the weekly, against the main forces. We need two false breaks and convergence principles. Remember my New Zealandian yen, guys? That's what I did exactly. New Zealandian yen, this one. Two false breaks. One here. One here. And then we got this convergence principle. This one. This one. Doesn't matter. Alright? Two false break and convergence principle because we are against the weekly chart. Remember that. So basically, I want to go back to the dollar yen. If we did not get that, can we still go long? Yes, we can. How? And two waves down or bottom of range. We got here small range. Here. Right? We can drop even to lower time frames like the 1-hour chart. Two waves down. 1, 2. And look for buys, false breaks, or trendline breakouts. And look to join the buys. You are with the weekly. You have nothing to worry about. You are with the main forces. You got two waves down here, bullish divergence, trendline breakout, and you got the bullish reasons. Two waves down or bottom of range and you can go long. Join the first look, exactly. That's a very important tip, friends, which I want you to remember. If you go against weekly chart, look for two false breaks in a row and convergence principle. If you go with the weekly direction, one false break is more than enough. That's the best time also to apply the trend lines breakout. When you go with the weekly direction. And that is one of the main secrets that you have to remember. That and the two candle principles. When you start to apply that, suddenly many things would be much different for you. Now, as I said, guys, what do you do and how do you trade? What strategies? I don't care. What I do care is how you identify the direction. And that's where the weekly cycles come in. With the weekly direction or against. Now, I want to ask you a question here, friends. Aussie dollar, bullish or bearish? Who can tell me? That's tricky, so think carefully. here comes the tip, because some say bullish, some say bearish, which makes sense, some say range, which also a possible scenario. False break and false break. So that could turn to be a range, right? If you cannot identify clearly, go to the previous cycle. Previous cycle was 2 waves down, or 2 waves down here, which means we need to go up and correct that move to the 38.2. Alright? Which means as long as, or of course if we name that special, for example, boom, boom, which will still be correct, we know we are going up. So the bottom line is, as long as the last low holds, we are looking for buys. If the last low will be broken, we will have to stop and revalue the cycle, because the cycle might be changed. Every triple cycle was first of all double cycle. Every special cycle was first of all double cycle. Every range was first of all double cycle. We don't know the future and we don't want to deal with the future. We want to make sure we join the present on the best timing. So how do we join these buys? 2 waves down, and we are looking for buys on a daily chart. Do we have 2 waves down? Yeah, it's forming. Do we have a bullish divergence forming? Yeah, we do. We drop down to 4-hour chart and we start to look for false breaks. Do we have false break, guys? Yes or no? No, exactly. Therefore, we still cannot long. Does that make sense, guys? Do you see now how everything comes together? You want to apply here any strategy you want. Any strategy. After you define the cycles correct and the false breaks correct. What you do after that, I don't care. Any strategy on a direction is good. I don't care. Do it your style. But with the market direction, with the real money flow. Questions, my friends? Any questions? I know you might be scared right now. You might be regret now of joining the 3 webinars in a row today. But this is there for you, guys. Watch that as many times as you need. Ask the questions. And you would start to see everything in a different light. That thing I can guarantee. You would suddenly start to understand things completely different light. No questions, huh? I scared you fairly? That's a good question, videos. 1 hour chart is enough, of course. Where did you get your convergence principle here? This one was still not broken, right? Yeah, false break you did. Not convergence principle. So you mean you trade aggressive? Fine. Aggressive you could. I prefer conservative. That's correct. You can do 4 and 1 hour chart because the 2 waves down are on daily. True? Definitely. I prefer conservative. So correction, conservative convergence, retrace, and buys. Yep. Definitely. Alright, guys. So if there are no questions, And I want to thank you very much. Now I want to go to this slide. Now this slide is very, very relevant. Thank you for being here. Thank you for watching. Thank you for dedicating the time for me and the webinars today during the holidays. And I wish you all the best. Happy holidays. Happy New Year to come. Once again, thanks for watching, and I'll see you around on Skype. I wish you best. Thanks for being here. Bye for now. Thank you guys. Thanks. Cheers.